Hey guys, my name is Nick B, and let's jump into this week's futures overview. So let's start off with the fundamentals for the week. We have nothing going on Monday. Tuesday we have core retail sales at 8:30 a.m. Wednesday we have FOMC at 2 p.m. Thursday unemployment claims at 8:30 a.m. Friday nothing going on. So I think the big event is probably going to be on Wednesday, the FOMC. Let's see if we can get a move before that or after that. Um, let's clear this out of the way for now. So again, not much has changed. Let's start with ES. We'll take a look at NQ after, but these are the same levels that we have up pretty much since the last 2 weeks. Again, since nothing has changed. Let's pull this up on the 3-year weekly again. And let's point out the main channel that we're still in between, which is 43.25 and 46.30. These are our two pivot points. These were previous lower highs, and ever since the trend changed again, we got above the previous lower high of 43.25, 43.27. But generally, that level, ever since we made higher highs above it, it pretty much has been holding this entire move up to the upside. It's been kind of tricky on the intraday levels, and we'll take a look at that. The main one standing out to us is being 4,500. I think it's also interesting. This looks like a bull flag a little bit here. We squeezed out towards 46.30, rejected back down, came back into this territory. So now it's really a question of, does this move get bought back up to here? Do we knock on the door of 46.30 again and have a clean precise breakout towards 4,700 as our first target to the upside? Or are we going to make our way towards testing previous higher lows such as 44.10 area, 43.70, and if 43.70 fails to hold, will we see 43.25, 43.27 again? If we do, we'll take it from there if and when that happens. I really don't expect to see that happening into this week, at least not yet. But again, when we get there is when we get there. I don't think that's gonna happen yet. If we do, maybe at most, maybe we come down to 43.70 as the last stand of testing the previous higher lows on this uptrend, and then if that holds off, we should be able to get out of that bottom end territory. But again, this is something we have to just wait it out. We can't really afford to time these swings. You can try to time and scalp the intraday levels as we're going to break it down right now, but I'll show you why it's not really worth it. So on the intraday level, really we're in between, well, 46.30. We have our guidance level of 45.50. Guidance, and when I say guidance, I mean that if we get above 45.50, most likely we have a green light to keep going towards 46.30 as our next biggest resistance level. And if we stay below 45.50, just tells us that price is not strong enough for a continuation to the upside, and we may be seeing a continuation to the downside. But before we do that, the main level I want to point out that we're basically still below right now is 4,500. It's the psychological SNR and a good intraday SNR level as well. So there's a few things that could play out here. I think the first three scenarios I want to point out is the first one is being we come up to the 20-day on the daily, which is roughly around 45.20. It makes sense. And then just when the bulls, if there's any bulls that would want to bite on a long above 4,500, they may be targeting 45.50, 45.60, but I think it's possible that maybe at 45.20 price begins to stutter and then we start to sink back down below 4,500 and possibly even coming up on 44.11. And before we see 44.11, though, to confirm, I would like to see us really below 44.60. That was basically where we wicked last week. We weren't able to kind of head lower. The move basically got bought back up. But if we are to really break below 44.60, I think that's going to be the green light for us to make it down to 44.10 area, 4400 first as the previous lower highs, higher lows, excuse me. And then if we can't hold 4400, 4410 area, 4370 is going to be our next target. And then below 4370 is 4327. Again, that's a stretch. Again, we still have not been, even since last week, in the last 2 weeks, we still have not been able to take out the previous higher lows. That kind of rings a bell for me and tells me, maybe we don't go lower. Maybe we do. Again, when I start to kind of, have a 50-50 split decision, especially when it comes to setups and trades, I prefer to sit on the sidelines and just let price action do its thing. Last week we attempted to short ES and NQ, and we got stopped out basically. However, had we held those positions, it would have played out in our favor, if we had wider stops. But again, it's not worth the risk in this area. If I'm about to risk 100, 150 points, it does not make sense for me to target 100 points, 150 points. It just cancels out for me. So we're going to sit this one out. I am looking forward to, at least for a clean move. Again, I want to just specify a clean breakout would be a 46.30. You get a close above that on the hourly, and you're good to target 4700. If we're talking downside, I really, really don't want to attempt to short anything unless it starts to break below 43.25, 43.27 area, that previous pivot, because below that, it's a green light to come down to 4200, just no questions asked. Maybe either on the retest of 43.27 on the breakdown, but I think that if that move was to play out, it would have some momentum, some mass behind it to really take us lower. And again, below 43.27, I would be definitely targeting 4200. But we can't do that. And we're in this funny money area here where we're still above previous higher lows. This is still an uptrend. It's just we got to figure out what's going on over here. What are we going to do? Are we going to finally get above 45.50, or are we going to break down the previous higher lows of 44.10? That is going to be the first barrier for us to cross to get any idea of direction. If we break below 44.10, okay, we're probably going to head down to 43.70, and then we'll take it from there. If we get above 45.50, okay, we might get a green light to go to 46.30, and then we'll take it from there. Otherwise, everything here, you're just asking to get hurt. And we've seen basically live examples of this in the last 2-3 weeks. So let's not take our chances here. That's with ES. And again, even if I break it down to the hourly, so I guess maybe some people are focusing on this bearish channel here to the downside we have, which is definitely valid. And that's also why I've been saying it's possible that, the market might screw with a few traders. Look at that on the hourly. I just said the possibility of us heading up to 45.20 and then price fizzling out back down below 4500 just to screw with traders is a possibility. And here we are on the hourly. The 200-day EMA actually lines up close to the 45.20 level. So that kind of just solidifies for me at least one of the three scenarios that I pointed out that I'm looking for into this week, and we'll see what we get. Again, in this bearish channel, again, you can try to time it. Not worth the swings here, and in terms of signaling such moves, it's just not sustainable because you got to get in on the price that I would get in, and you got to get out at the price that I would, and it's just very tedious. So we want to avoid that. We want to remain calm. We want to keep our peace of mind, and then go from there. So that's with ES. Again, nothing tells me on the hourly. The only thing the hourly can confirm to me is if we break below 44.60, okay, there may be that green light towards 44.10. Otherwise, on the hourly towards the upside, the only thing that can confirm a possible move that we get that green light to go higher is above 45.50. Everything else, like I say, is just baloney in between. Let's take a look at NQ. So NQ, same thing. Let's pull it up on the 3-year weekly. Same levels basically for the last 2 weeks. Don't need to add in anything here. The big difference though is with NQ we're below 15,265. Now that's a little bit shaky for me just because this is a previous pivot level. If we want to continue higher, we have to in a sense remain above this level. But the last line of support for us is still at 13,750. 13,750 is still holding up this entire move to the upside. So I'm not ready to stress yet. Similarly, I think I would correlate the moves to the downside on NQ similar to ES. So if ES is going to be testing its previous higher lows of 44.10 and 43.70, well then NQ is probably going to follow. And as long as we're below 15,265, the possibility of us heading down to 13,750 is definitely on the table, but something big has to happen. Something that really gives us juice to head to the downside, because the VIX hasn't really been doing it. TNX hasn't been really doing it. TNX is the 10-year yields, 10-year bonds. Let's see, the dollar really hasn't been doing it much either yet from what I see. I mean, we did get that boost, but what it looks like with the dollar, what's going on with the dollar, let me pull that up really quick since I'm talking about it. What it looks like is a dead cat bounce, because we basically had this breakdown here. I mean, actually, no, what am I saying? At first, no, it is actually, because this is not a bullish engulfing. This is, you see how these candles are sporadic? It doesn't necessarily tell me that this is strong. This is a strong move to the upside. The only way where it'd be like, okay, maybe we might expect a little bit of selling pressure. Maybe the market might not like this, is if we retake 104.67 and continue to climb higher. I think at some point, though, that we're going to revisit 175 area, and if we can break below 175, I think, again, that should give us a green light to head a bit higher. So let's go back to NQ. And interesting with NQ right now, it's at last week's previous session lows. I'm going to break it down to the smaller time frames, but again, similar to ES, I guess. Let me point out the higher lows on the 2-year, on the 2-year daily. That's fair. So we'll keep 13,750 in mind over here for our support, and we'll work our way down. So the first higher low that we came up across last week was around 1560, 1550. We actually wicked there, bounced off of it, currently bouncing on the daily. So that's a good sign, unless we can't take over the first R, which is going to be at 15,265. As long as we stay below that, I mean, it's very possible we see that these attempts to the downside. It's possible. But again, I'm not so keen on shorting the move below 1550 down to 14,850, because that's going to be your next higher low that we're going to attempt to test if we break below 1550. Now, the reason I'm not so keen, because I just don't trust this area. The trend is your friend. That's what keeps repeating in the back of my mind. The trend is your friend. So why would I trade against the trend? I don't have it in me. Before, when I used to do it, sure, maybe I would time the swings, but I changed completely my entire style of trading, and I'm really kind of a hermit now when it comes to, placing setups. And that's the safer and the best way to go, because again, why would you want to be risking your hard-earned dollars for nothing? This is a game of capital preservation. This isn't a casino or a lottery. Some people view it as that, but really, we're here to make calculated guesses still, but as protective of our money as we can. So if we break below 14,850, which is the last higher low, we can start looking at the possible base support of 14,700, and then below 14,700, maybe it'd be worth it for us to maybe take a nibble on a short down to 14,250. That would be fair. And again, below 14,250, we would probably be coming up on 13,750. But again, I don't really want to cover too much of the downside areas, because I'm not really expecting that to play out that way. I really would be surprised if we blow out the previous higher lows. That'd be really surprising, because as we've also seen in the last 2 weeks of August, these binary events, these fundamentals, I can't find enough of a bearish catalyst that we make that leg lower. I mean, it doesn't make sense to us, and if it doesn't make sense, it doesn't make dollars. So that's probably why we haven't been seeing this move lower. But let's see. I mean, again, we're just in the funny money area. If I had to really section off the intraday support channel, I mean, not support channel, but the channel, the floor that we're in, if I had to section it off, I would section it off from 14,850 to 15,500, because this is this is this is the similarity. I'm going to compare ES next to NQ here. If we're going to end up at 14,850 on NQ, I'd already expect us to be near 4370 on ES. And again, we can't really make a move on ES shorting or going long anything between 43.27 to really 46.30. You're either going to get a move up or down. Trying to time the swings in between, not our cup of tea. We've determined that. So similarly, 43.27 will probably be 14.850 on NQ, and 45.50 on ES would probably be 15.5 on NQ. 15,265, getting above that is a good start, but you don't necessarily want to go long and try to target 15.5. At least my thought process tells me I don't want to go long and target 15.5 and risk points down to 15.50. That'd be about, you're risking about 200 points to make 250. Again, does not make sense in my books. That's something I would like to avoid. So something a little bit cleaner, well, the cleanest long that I would really like to target is a break above 16,000 on the hourly, and then we could easily target 16,450. Let me just point out why 16,450 right here. It was a previous all-time high, and I feel as though that is a fair first target to the upside. We could risk probably 100 points down to 15.9, set our stop, because we've noticed over the last 2 weeks, when price action was playing around that area, 15,900 was an important momentum level. So we could risk 100 points down at 15.9, get above 16,000 and target 450 points. That's a solid setup. That's a solid trade there. Or downside, I guess, below 14,850. Let's see, targeting 14.7. No, that's about 100 points, 150 points. The moves downside, it's like not worth it. Where we'd be risking, let's see, 14,850, 950, 1550. That's like almost 200, 300 points we're risking to make a possibility of the first target being 100 points away. You know, it doesn't make it make sense. It doesn't, at least in my books. So if it doesn't make sense, I try to stay away from that. And that's just my thought process going into it. You can, again, you can definitely short these moves. You can definitely attempt to, trade these swings up and down intraday. It definitely has that kind of setup and that vibe, especially on the hourly when you're watching, the charts from Monday at least into Wednesday. There should be possible opportunities, but again, over the years of doing this, it's just not worth it. I mean, I fucked up so many times trying to do that. So when I see the chance where I could sit out and, be patient, I'll take that over risking my dollars here, because it's just not worth it. Like I say, if it doesn't make sense, doesn't make dollars. And that kind of proves to be true. So with NQ downside, we pretty much covered. Really, we're watching for the higher lows of 1550, 14,850 as the last line of support. If we break below 14,850, again, we'll cover it, but I have a hard time seeing that play out. I'm more focused on seeing if we can retake 15,265 and if we can retake 15.5. If we can't, fine. I'm not exactly married to one, direction or one bias. I know I tend to be bullish. We all are perma bulls mostly at GAR, but if the position and if the opposition switches, I have no problem switching sides. So if we break below 14,850, okay, we'll take a look. I'll probably want to short probably 14,260 down to 13,750. That'd be a little bit more fair for me. But everything in between here, it just sits funny in my chest even talking about it, because these are funny money levels. You don't have that certainty. The move is still being held up at 13,750, but here we are talking about a breakdown when technically this move is still bullish. So that's downside. Enough of downside. Let's talk about upside. And upside, I've covered it a little bit briefly, but again, I'd really like to see us above 15.5, maybe above 15.5. We could nibble on a long targeting 15.9, 16,000 area, but really the clean long, the clean breakout is above 16,000 on the hourly, and we can target 16,450, no problem right here. So that's really all I'm watching for ES and NQ for this week. We could take a look at, no, I'm not even going to do that actually no, let's take a look at crude. I was going to say YM, Dow Jones, but I'm going to skip that one. Let's look at CL really quick. What do we got here? Okay, so we are on the 2-year daily with CL. Okay. right here. This stands out to me. What is that? 85.30. I won't mark it just yet, but I think it's interesting. It's a previous all-time high. We have a bit of resistance here. Couldn't get above it, got above it, held, and then it acts as support around these areas here, and basically it's resistance. Basically, it's resistance. I've also seen quite a few analysts calling out for a possibility that crude keeps going towards 86, and we're fairly close to that area. So let's see. Let's see. Let me mark up some lines so it makes better sense here. Okay, this is going to stand out to me here. We got above it briefly. How high did we go? 85, and we couldn't hold above it. And this level is at 83.56. This I would mark this off. It looks like the bottom line support, and the reason I say that is because you have a bounce here, here, you have a breakout, retest, and a continuation. We came back down to retest and it held off, and we're still holding this area. So that's a little interesting channel we have here on CL. So let's take a look at it now on the 4 hour. Maybe we see something. Okay. So right here, these wicks, I'm not going to chart it just because I don't want to dirty up the chart. Actually, just for illustrative purposes, I'm gonna chart it right here. And we have a wick here. Here, candles closed below this level, and then we wicked up to this level as well. It's at 82.50 basically. Not much to consider here, but I find it interesting that it was resistance around here. We held a little bit of support. Nah, I didn't even hold a support until the second time around. We got above it, and we held a support here around 82.50, and we are currently wedged in between that level. So crude is definitely Carlos's thing, definitely, I'll tell you that much. But what I would do, because this is a bullish channel here as well, let me see if we could maybe use an extra tool to help us out, get an idea of the direction we might take on. Okay, so that's your 200. Okay, so basically, as long as we can stay above 82.50, that should be bullish. And if we can get above 83.50, I don't see a reason, well, not even 83. If you want to be safe, let's say 83.82, just to get above that wick, just to get that safety, that confirmation of a breakout on the hourly. I think you could target 85 again, no problems, no problems to the upside. Shorting crude, mm, below 82.50, you have support at 82, you have support here at 82.20, you have support at 82.6, well, 82.16, basically the 200-day EMA. I guess if you break below 82.20 on crude, you can probably target the $80 level support first to the downside. Yeah, and set your stop loss probably a little bit above 82.50. I would probably set it at right here, probably at 80, 83. Perfect. Yeah, that would be the downside move. That's with crude. Again, not a name I look at too often, but definitely something that helps keep us afloat during the weeks when equity futures are quiet. Other than that, I mean, that's all she wrote. Thanks for tuning in, and I hope you guys have a wonderful trading week ahead. Cheers.